right? So I mentioned in one slide what we have discussed in the last class. First of all, we said that there are three standards on the financial instrument under Ind AS. One is Ind AS 109, which deals with the financial instrument. Second is Ind AS 32, which deals with equity and liability presentation. That means entire chapter is dependent upon what is equity, what is liability. That means under Ind AS 32, we will understand what is the meaning of equity. That means we have already read equity in the past. That means we are going to read something else in this chapter in Ind AS 32. Again, in this chapter, we are also going to read what is liability. That means something else which we have not read in the past. Then we have Ind AS 107, which deals with the disclosure standard, right? Okay. In the last class, what we have said that first of all, under IFRS, there is another standard called IS 39. There used to be another standard called IS 39, which is an old version of IFRS 9, right? So this IFRS 9 was made applicable from 1st January 2018. But in India, we have adopted IFRS 9 in the form of Ind AS 109 starting from 1st April 2015, guys. That means in India, we have not issued a parallel standard to old standard under Ind AS, which is Ind AS 39. We have not issued, right? We have issued directly Ind AS 109, which is a parallel standard of IFRS 9. Correct? That means effectively all these standards, Ind AS 109, Ind AS 32, Ind AS 107 are applicable retrospectively starting from 1st April 2015 for the phase 1 companies. Right? Similarly, these standards will be applicable for the phase 2 companies starting from a transition date 1st April 2016. Correct, guys? Then we said that there are two thumb rule. One is the retrospective application. Second one is the fair valuation. What is retrospective application? That means if the company has entered into a transaction in 2010 and then transaction is outstanding on the transition date, maybe 1st April 15, maybe 1st April 16 for the phase 2 companies, then we are supposed to apply Ind AS 109, Ind AS 32, Ind AS 107 on that transaction starting from 2010. That means we need to go back in 2010, compute the number as per Ind AS 109, as per Ind AS 32, and bring the carrying value as on transition date and record it. Right? This is what the meaning of retrospective application. So when we will deal with a couple of questions, then you will also get to know in detail how these numbers have been practically computed, not only from exam perspective, but also from the companies in practical ground perspective. Right? Second thumb rule, we have talked about fair valuation. That means every transaction needs to be recorded at fair value on the transaction date. Right? This is what we have read in respect of the brief and the basic background on financial instrument, guys. Right? Secondly, then we have also talked about financial instrument. What is financial instrument? We said the standard setter has taken these two words. One is financial, one is instrument, and they have set up the entire standard. So financial dictionary meaning is denominated in a monetary value. Anything which is denominated in a monetary value is called financial. What is contract? Contract is an agreement. Contract is an agreement, and agreement has to be entered between at least two or more parties. Right? It is not possible that you guys enter a contract with yourself which is legally enforceable. It is not possible for me to enter a contract with myself which is legally enforceable in law. So that means in order to enter into a contract, there must be at least two parties. At least two parties. Right? So what we said that if a contract or an agreement has been entered between two or more parties which is denominated in a monetary value, is called financial instrument. Right? Then we took two examples, if you remember correctly, guys. First is sale and purchase example or debtor and payable example. For one party, A Limited has sold goods to B Limited. B Limited has to make the payment of 1 lakh rupees to a party A. Right? In that case, what we said that for A, it is a trade payable, it is a trade receivable. For A, this trade receivable is an asset because we have already know that what is an asset. Trade receivable is an asset. Right? And since this asset is denominated in a monetary value, we will say this asset is nothing but a financial asset. Right? Come from the B perspective, we said B has to pay 1 lakh rupees. B has to pay 1 lakh rupees, and this 1 lakh rupees is nothing but a trade payable for B, and this trade payable is a liability for B, and since this liability is denominated in a monetary value, this is nothing but a financial liability for B Limited, guys. right? Now apply the definition in this example. Any contract entered between two or more parties which give rise to a financial asset of one entity and a financial liability of another entity is called financial instrument. This is what the first example we took in the last class. Vasundhara has joined and she's saying good morning. Good morning, Vasundhara. Okay, in the second example in the last class we took is investment example. A Limited has made an investment in B Limited, right? So for A, it's an investment. That investment is an asset. That asset is denominated in a monetary value. So we will say that investment, that asset is nothing but a financial asset. For another party, is it a liability? No. Other party has to pass an accounting entry, bank account debit to share capital. So for other party, it is a share capital. It's an equity. Right? Again, combine this definition. Any contract entered between two or more parties which give rise of financial asset of one entity and equity of another entity is called financial instrument. Right? Now combine these two examples. So what we said in last class, any contract entered between two or more parties which give rise to a financial asset of one entity and either a financial liability or equity of another entity is called financial instrument, guys. That means trade receivable is a financial instrument, trade payable is a financial instrument, investment is a financial instrument, equity is a financial instrument, guys. Correct? Then we said, what is financial asset? Financial asset means cash. Cash is a financial asset. Or prior to moving to financial asset, what are the three things which we have identified for financial instrument? Contract, two or more parties, monetary value. If all these conditions will get satisfied, then we will say it is a financial instrument. Then come to financial asset. What is financial asset? Cash. Cash is a financial asset because cash is a contract. It's a legal tender money. Investment in shares is a financial asset. Contractual right to receive cash is a financial asset. What are the examples? We said trade receivable, bank balance, security deposit paid which is to be refundable, loan which is given and to be refundable in the future, investment in debenture, investment in bond, investment in kind of loan given, right? So these are the different examples of the financial asset. Then what is not a financial asset? PPE because there is no contract, inventory because there is no contract, capital work in progress because there is no contract, intangible because there is no contract, right? Investment property because there is no contract, right? Deferred tax, it's a notional entry. I'm not supposed to receive any cash or bank, right? Advance tax, taxes are outside the scope of financial instruments. So GST receivable, service tax receivable, advance tax which is to be receivable, let's say for in the future years, these are outside the scope of the financial asset. These are assets to be recognized as other current asset or other non-current asset, but these are not financial assets. So all taxes have been kept outside the chapter, outside the standard of financial instrument, because standard charter is saying because these are the statutory obligation, these are the legal obligation of the company to pay taxes. It is not a contractual obligation of the company, right? That's why all these things have been kept outside, right? What are the other example of the financial asset? For example, what is not a financial asset? For example, ROU is not a financial asset. Advance given to the vendor is not a financial asset, right? Prepaid expenses is not a financial assets. Correct? So these are the different things which we say these are not a financial assets. Okay, guys. After this, what we have said, we said what is liability? Contractual obligation, right? Contractual obligation is the financial liability, right? What is the example? Trade payable, lease liability, mandatory redeemable preference shares. Very important. Under Indian GAAP, we used to recognize it as a share capital, but under IFRS, under Ind AS, we will recognize it as a liability if it is a mandatory redeemable preference shares because I have to pay cash. What is not a financial liability? Deferred tax, provision for tax, advance received from the customers. These are not the financial liabilities. Correct? What else is there in respect of financial asset and financial liability? Potentially exchange of financial instrument at a potentially favorable condition in the case of financial asset, exchange of financial instrument at a potentially unfavorable condition in case of financial liability. And what is the example? Derivative is the example. So we will discuss this point when we will talk about derivatives, right? What is accounting in this particular case? We will talk about. What else? Then we talked about the settlement through own equity shares. Settlement through own equity shares exists in case of financial asset. Settlement through own equity shares exists in case of financial liability, and settlement in own equity shares also exists in case of equity. This particular topic we will deal in detail when we will talk about the equity and liability under Ind AS 32. But what is equity? Residual portion in the total asset excluding liability is my equity. Correct? And second definition is when there is no contractual obligation to pay cash or bank is the equity. So how many points are there in the definition of financial asset? There are 4 points. How many points are there in the definition of financial liability? There are 2 points. How many points are there in the definition of equity? There are 3 points. Right? After that, we have discussed scope. We have also discussed the example of financial asset, financial liability, and equity. Right, guys? So this is what we have discussed in the last class. We have recapped in last 10 minutes. And if there is any doubt, please let me know. Right, guys? Let's move on and let's discuss